You can work around them. Let's go into these sectors, Scott, because, you know, there's a lot going on with the market. Let's hit them. One of the sectors that has actually done well and even did well yesterday in all that selling was energy.
Yes, energy has been doing well, even though oil has been coming down. We've spoken about the OAHs. I like the pattern here on the OAHs. I like the way some of the stocks are acting. Here is that descending channel. You know, if you look at it, they came all the way down. We broke above it, retested it. I think if these OAHs get going, you could be a buyer above 153, 155. It's above some of the moving averages. This sector, to me, is one of the better acting sectors, and some of the stocks within that sector are acting well, like a Halliburton, like a BHI. I think even Oxy's on the radar. There are some things, tradable leaders within that group besides the ETF that I think you could watch.
All right, we had a lot of M&A action going on in that group. It's got a lot of activity, a lot of spin-offs, a lot of buying, lots of movement. Let's talk about retail, because retail's been a little dodgy. You got winners and losers within retail.
Yeah, the last move we had, retail was super duper strong. Went back to those highs and sold off. I still think it looks okay. If you look at the RTHs, we'll look at the pattern here. You'll see that this one came all the way back to those old highs, showing some pattern considering where it came from. It's also been a choppy road all the way back. This retested that last breakout. So if you bought some RTHs, I think it's got to get above 110 or so on hold and then continues. But I think if you bought some yesterday, that was a good entry. And there's also some of these retail stocks that have also been helping to lead the market.
Right, some of them like Lulu or Under Armour, you know, but it's you have to really be careful about these names because, like I said, there's winners and there's some big losers.
Yeah, it seems like in every sector there's either a small stealth bull market and then you also have a devastating bear market, which I talked about in my note. But Lulu's been acting well. You know, Under Armour, if you take a quick look at A&F, you know, Abercrombie, this looks like it's ready to go. It, you know, came off that lower area, didn't even pull back to the lower moving averages, well above the 200, a stone throw away from the highs. So if this thing were to start getting through the, what's this level here, about 75 or so, this should see some new highs, and I would actually watch this for cash flow as well.
All right, one group that has not been too well, that's been pretty weak, is those transportation.
Yeah, which it shows how things change, because last time we checked the temperature of this group on the last move, it actually made new highs first. And since then, it got hurt really fast. So if you look at the IYTs, you will see, you know, this was a really big pullback. This actually made new highs, right? It went above it, and then sold off really severe, almost back to the same support that some of the other sectors held. You would have thought it would have held higher if it was that strong. So right now, this goes back into the neutral to positive camp, not the leading camp like it did on that last move in earlier July.
All right, well, if you thought those transports were smelling up the joint, look at those financials. This group is like at a 2-year low. Really horrible look out of that financial. But some are calling this a bottom. Some are saying maybe now is the time to get involved. What do you think?
I think I've been hearing that for about 2 years, and every time
the
market
keep that bottom, but
you keep going lower, and sometime it will happen. You know, a lot of people made their fortunes in the 2007, 2008 buying opportunity in those banks, but since then they've not only been a laggard, they've been a headwind. Right now we don't want them to just be a leader, we want them not to be a headwind. So right now if you look at the XLF, you'll see, you know, I showed you other charts. Look at this one at lows, but sometimes you have a move like this where it breaks lower support, tries to come back up. That's somewhat of an outside day, wasn't so powerful. You know, but I think if you did buy here in the XLF, maybe you have a little move back, and who knows, maybe we see some rotation. We saw, what I didn't like is, you know, JP Morgan came out with decent earnings. It opened up, they sold it. Citigroup, you know, was kind of lukewarm, sold it. Today,
Bank of America this morning,
which we'll have to look to see if the trend changes. Bank of America was okay. It's opening up. What happens if they try and sell it? It holds, and then it goes and squeezes the shorts. Then we know that perhaps some of this is baked in the cake with the banks, and that can give some confidence to actually hold them for more than a day and a half and try and get some type of sustained move.
Scott, I hear about this 5-wave down theory with technical looks. Now, when we look at this chart, do we see these 5 waves down? Is that something to be mindful of, or is that bunk?
Yeah, there's a lot of different trains of thought. You know, you have the Elliott wave theory, you have the 5-wave theory, you have, you know, the Fibonacci. You know, I look at a lot of them, I overlay them on patterns. There's actually some talk right now that there could be a head and shoulders pattern developing on the S&Ps, but I also see a potential cup and handle. Right now we need some more data. If I go back to the spiders here, you know, there are some people that are saying that we are in the midst of developing the right shoulder of a head and shoulders pattern. Okay, this being a big left shoulder, this being the head, this being the right shoulder, and then the neckline going across around the 200-day. Or this could be, look at this cup, and this could be a handle, and if we break above this handle, we can go off to the races. So at this point, there's two camps right now, and there's not that much clarity. So when there's not much clarity, you want to be involved. You just don't want to be all in, just in case we see the Eurozone intensify, just in case we see a hard credit break, just in case the idiots on Washington don't come up with a conclusion to this debt problem. And I'm sorry about that if your uncle or aunt's a politician, but I just can't believe what's going on. It's embarrassing. Anyway, this is not about politics, it's about the market. So we have two different patterns developing. We'll see which one works out. Right now, pricing and timing is everything. And just so you know, in the last 4 weeks, we've seen headline after headline. Not to be involved in the market, but we've outlined about 15 to 20 stocks that have moved 5 to 70 points just to show you that you could be in the right place, right time. You don't always just watch the headlines. You could watch some of the action.
Right. And Scott, one of those groups that's done very well are the tech stocks, but we're going to talk about that after the commercial.